very nicely here. They sold it off at a high there on yesterday afternoon, and kept selling it into the last hour. Again, remember the uh, that last hour becomes a little bit more very you know tricky to trade, and that's why we focus more on the morning trade. It's trades well technically for us, much better in the afternoon. You get much much more one-way trade and less volatile, or maybe more volatile depending on how you look at it. And it becomes a little bit tricky here to trade there in the morning as we come up here to 84. It's a little bit too close to the opening, and you don't want to jump in. I get it. Wait for 92 above. As the market kind of upticked here, just ran to the opening. So 92 next level above that we have a little resistance again. If you're not taking in at 84, it's probably because we just opened up here, and it could really go either way. We'll see. It all depends on how much risk you want to take. In regards to showing you trades and stuff, we have a trading methodology that we like to teach, and there's different aspects of risk that everybody has, and each individual decides on their own whether they want to take the opportunity to trade those setups or not, because we discuss the risk involved in each of these trades and tell you what how risky they are and what you should be looking for in some. And so it's more an individualized kind of trading when we are asking each individual to show you the setup. So, and that is one thing that that we try to make sure we do, is that we individualize the trades here for you, and you have to decide whether you want to take these trades or not based on the risk tolerance that everybody has. Everybody's different, and we get it. All right, 92 here's the next level of resistance on the upside here. The market, like I said, has come up very nicely here off of these lows overnight. Come up here to the 92 area. Again, if you just keep your stopping, because again, we don't know these things are going to work or not. We just think that they will based on that work that we do. But sometimes we're going to get fundamental news that's going to overtake the technical and create the extra volatility that's involved in any of these trades. And that's what's going on here. Maybe they did sell it off. I mean, I was very surprised that they sold it off, and then they kept selling it off into the European Open. So it was definitely, again, volatility is still here. So keep that in mind if you're trading. Market is a little bit slippery here. There's not that many. There's not 100 lots anywhere up on the ladder ticket. It's pretty much, less than hundreds up and down, probably 70s. So it's very, very thin still, and you're going to get quick movements here, especially first bar. Like we always talk about, the first bar is always a little bit tricky, and some of you like to take it, some of you don't, and I totally get it. As we quickly come up here, and a little bit of push. Sure, our pivot this morning was 32.77. Kind of then the first level resistance where the market kind of opened up here was 84. Now we're testing the 92 here. Then 3,300, 11, 24. Support below at 66, 57, 49, 40, and 33. Again, market coming off here. Maybe take lighten the load here. It came back here down to the 92 area. Again, everybody trades just a little bit differently here. We're probably looking 4 to 5 point stops here um, with our stops today, only because it's still the VIX is up to or down to 36.55, so that's a very hefty number, and volatility definitely is still here as we drift off here a little bit. Still, I was just finally finished that first bar, and we're all over the place. So you can see here the volatility is still among us. All right, so nice little trade there. If you took it and had at least a 5 point stop here, depending again, minimally you had to take 5. I mean, it's still very goofy. I was even going to say, if we opened up a lot lower, we were going to be the stops were going to be, a little bit higher. But I think 5 points is pretty fair. It gives us a chance to handle the slippage, and also gives us a chance to stay in the trade, given whatever fundamentals might have hit the market at any given point. We are trading mini S&Ps here. We don't believe markets go straight up or straight down. Consequently, we're trying to find these inflection points to give us the opportunity to make a little bit of money. And these inflection points are created by the market, so we try to locate and find them and try to trade around them, and try to be able to scalp the market and give us an opportunity to make money. And that's what we do here on an everyday basis. We used to do this from the Florida Exchange, but given the fact that COVID has stricken the world with its virus, it behooves us to stay home and do this. But we don't really lose out too much, I don't think. I think most of it is business goes on as usual, considering most of you have been trading from home anyway. Support will be back around the pivot there at 77. The next level on the upside we have is the even area, 32, 33 even. The settlement price is 225. For those of you who are thinking about that. So there are. Sorry you can't join us on time. You're probably hanging out at the beach a little bit. I don't blame you. All right, so again, 77 support, and next level on the upside is 3,300. The connection is up and down. Oh, I feel for you. Sorry. My heart is bleeding for you. It's a snappy 32 degrees, which means freezing, 0 Celsius, if I'm not mistaken, here. So yeah, my connectivity is also just trying to freeze, but it's not there. So yeah, I feel bad for you. You probably can't even hear me. Okay, good for you. And then 10 minutes before the market open, I was had my feet in the water drinking a cappuccino. If I put my feet in the water, it'll freeze. I have a block of ice. That's what'll happen if I put my feet in the water. Well, let's make it happen. Pick your spots. Make your one trade and then say sayonara. All right. Still a win. A positive is a positive is a positive. Good morning there, David. Our pivot this morning is 32.77. Support 66.57, 49, 40, 33. Resistance on the upside at 84, 92, 33, 100, 11, 24. First support level at 66. Right now, low support would be back around our pivot as the market drifts lower. Coming back down here to the 77 area, maybe. Maybe. It's Friday, and we went right up to our, thank you, Sir Dar. There is the levels in the chat box area. We are whipping around here a little bit, but again, it's Friday. It's been an interesting week, and obviously, the United States presidential election is coming up on Tuesday, so I can't imagine how busy we're going to be Tuesday morning. That's a totally different story Tuesday night. If you've ever watched the markets during the elections, it's kind of interesting as they come up with the different states that come up and who takes what. If they keep doing that, I mean, I hope they still do that. They're still focused on everything else, but you get the swings in the market. It's crazy. It's like an F day on steroids. That's what trading Tuesday night will be. F day on steroids. So good luck with that. Well, once I put the trade on, then I'm focusing on the volume that's actually traded around let's say, like when it got up here to the 94. We had 92, and then there's a little bit of resistance. Some volume came in there at the 94 area, if I'm not mistaken, and then they just had that last little push up to 96. But that's what I'm looking at. Volume is traded to see if there's some quiet trade coming in around the level. And then I know where my stop is going to be, so I'm focusing on that. Since I do a finger stop versus, so I try to know where I'm at, and I just kind of let the thing kind of work itself out. And then once it starts trading, volume profile, the volume at each trade, it's traded. You have that on your does that come up on your platform there. You get the volume that's actually traded at each price. As we are drifting down here a little bit. Coming down here, we have 77, got down here to 78. And a little whippy around here all of a sudden, right? So again, just trade it with a little cautiousness. That's the right word. There's a gap in here a little bit. Somebody's getting a little finger happy trying to sell some. Testing our pivot here. Okay, got your 2 points off our pivot here. Remember, the price action plays are a little bit different than the set of the levels, so keep that in mind. All right, there's a reason for that. And we did trade up to 79 there, maybe got in and got out, and now of course it's going to give us a better rotation. Yes, that's what I thought would do. You know, it always does that. All right, but at least we have a nice little push off of it. You know, your blue banders and your pivot players all in one. Well, so you guys are friends today. About our next, okay, I'm going to do this again, and I'll show you really quick here. And last time I tried to show you my platform, it didn't come up on the screen here. So I'm going to do it again, and let me know if you can see it on this. And I'm going to put it in front of my chart. So I don't know, last time I tried to do this, you can see it. Can you see it? No. So yeah, it's there. It's in front of my charts, but you guys can't see it. So I don't know why that happens. I think I have to change monitors so you can, which I'll do in our class. So I'll let you know when our next class will be, and then we'll do it that way. How's that? It'll be better than trying to mess this up right now because everybody's in here. So we'll do it in our next class. I got it. That's what I said. Thanks there, Mark, Mr. Technician. Nice of you to join us. Quit partying after your LA Dodgers won the World Series. The selling came in around the 94. It got up to 92, and there was a little bit of a push at around 94, and then that little fly up to 96 was more of a just little pop because everybody thought it was going to stop at 94, and then they got caught a little bit. As we quickly rotate down here, a lot of pressure on this market. We talked about the different variables that the market has been looking at these days. We got support down at the 66 here. That's our next level of support. The variables include obviously COVID. We've not only had a high number of people testing positive in the United States, new average of above 80,000. It is a very large number, and then, but if you look at the hospitalization numbers, they're also a lot higher, and then obviously the deaths are going up as well because there is a correlation between that. Even though the treatments have been better than in March, they are figuring out that still this disease is just once it gets you, it gets you, and if it gets some people who can't deal with it, it just gets people who can't deal with it, unfortunately, and we just can't. This ain't going anywhere. Somebody's telling me that it's going someplace after the election on Tuesday. I wish, That's what somebody's trying to make you believe, but it ain't going anywhere. It's just not happening. Just not happening. Uh, and it's not only here. It's you know kind of going everywhere. I mean, it's not only in the United States; it's also in Europe as well as a lot of states that never got the first round of. They never got really a bad taste of it the first time in March, and now they're getting it as it does spread. It's amazing, right? It's just amazing. It's amazing. Any other times during the day to trade, um, if you are working during the day? Well, uh, well, I mean, obviously there's trade in the evening, but the trade in the evening is very thin. If you think it's thin now, sometimes when the markets are whipping around, it's very thin in the evening. It's a different kind of trade totally altogether. Um, I mean, obviously, I think the best time to trade. I mean, look, you know, if you can get to work at 10-ish or 11-ish, even if you're on the East Coast, it gives you a good hour and a half for trade. You know, in the morning, that's probably the best opportunity, bang for your money. I really don't like trading at night. I mean, I've traded at night. Um, uh, it's just a totally different ball game. I wish I could tell you it was kind of the same way to trade. It's a totally different animal, and especially for a new person to trade during the day, at night you know, you're not going to learn anything because it has its own little mindset, does its own little things. I mean, if you can get the morning to trade, you know, a couple hours, I think it'll be, you know, something that you could try to sneak in. I know work is obviously work, and you have to do that too. So I don't want to recommend you to trade anything else besides the first couple hours. Like I said, I don't even like to trade the afternoon trade because it's one-sided, and I'm trading it, and it's just a totally different trade. I mean, even then, it's a totally different trade. As we went down to 68 there, and then 68 area, and then came back up, we had 66. So yeah, I wish I could tell you that there's a better time to trade. I mean, I don't want you to lose money, and I also think it's more difficult to trade those hours, off hours, than it is at least the first couple hours here in the morning. So I don't know. Sorry, I can't give you a better answer. An honest answer. All right. Come back down here again. Test the R66 area. Let's see what we can talk about here. Google took the spotlight yesterday's big tech earnings show, rallying as much as 8% after hours as ads sales bounced back sharply in the pandemic after the pandemic slump. While other peers did quite well, the quarterly report led traders to pull out of the sector. Facebook slipped nearly 3% amid user decline and significant amount of COVID-related uncertainty. Those revenues were up more than 20% despite ad boycotts. It's amazing, isn't it? Amazon fell 1.5% after predicting 4 billion in pandemic costs under the next quarter, while Apple declined 4% as the iPhone sales missed estimates due to due to iPhone sales missed estimates due to customers holding off to purchase before the release of the iPhone 12. Okay, that makes sense. I mean, all it does for Apple is gives you a chance to buy it. I mean, it's just too good. Well, could put on option positions based. Could you put on option positions based on numbers? Yeah, you could. But if you're the only, I mean, let's put it this way: the option traders have a lot of spread in the bids and offers. Like you have you have bids and offers here, and if you're looking at your platform and the options, and then I mean in futures of a quarter point, right? The bids and offers in the S&Ps as we drifted down to 68 area again and bounced off. That's a little frustrating, right? Got down to 67.50. Bounced up here very nicely. If you are a green band there, it just went right to our green band there. Maybe you took both. Maybe you took 68 and 60, and we had to take 66 also, and even 65 if you were really scaling in there. So the bids and offers in the options market, as you can see here, of course you did. Here it's like a quarter, the difference in the bid and the offer, right? It's 77 even, 77 and a quarter, 77.50. And the options is 77 and 80. And then on the bid and below it, the next bid or offer is down at 74. So you have a bigger spread than the bids and the offers. So if you wanted to buy it and the market is trading at 77, you probably have to pay 80. So now, yeah, you have a larger entry point if you're buying or selling, whatever, and you're going to need a bigger move for the market to give you. You're giving up a lot before the market actually gives you a chance to make any money, even if it goes your way. Right, even if it goes your way, it rallies like 2-3 points, you're just breaking even. So the difference in the options play, and this is why the option guys make a lot of money, is first of all, and also you have to put up the money, right? It's not like here, you have the money gets in your account and you can trade off of it. And now at the end of the day, if you sell everything, buy everything, your money is back in your account, less the profit or loss that you had for the day. There, if you hold on to options, you lose, it's out of your account, right? So trading options is totally a little bit different as we quickly come up here. Obviously, if you scaled in there, I don't know how you scaled in. If you did scale in a little bit differently against our green band there, you're getting paid off. Obviously, we just missed our, depending on how you're trading. Some of you got it already. You guys are letting me know. So that's a nice trade for you guys who got in. But again, the problem, like I said, with the so now be careful there around the 66 because we obviously, some of you did not get it, and if you didn't scale in the right way, maybe you are obviously it becomes a little bit more tenuous. Maybe make a little bit of an adjustment. 63 or 64. All right. We have the 57 underneath, so a little bit, obviously if you missed it and you concerned about the 66 now and you cancel it, that's fine. So, or if you're going to make an adjustment, that's fine too. It's up to you. Anyway, so yeah, so the question on the options is this: it's kind of tough to trade options because of the fact that they have a large spread in your entry point. It's not like you can get in and be able to And like I said, you probably have to hold it. Markets are moving really fast, so you're going to get movement there in the option prices as well. But again, the options are more for. I honestly don't like trading options for that reason. Like when if I had like an idea when I was trading the bond market and I had an idea where the bonds were going, or if I wanted to speculate where the bonds were going, right? And that's where I would speculate. Um, yeah, and that's where I would like look into and see if I had a long-term idea of where bonds were going to go. I would, instead of trading the futures and have a position on the futures, I would go and put a trade on in the options. But how I did it was I knew an option trader in the options bit, and it was a broker, and I would tell him what I want to do, and he would have that position. He would, you know, wait till I got a good trade. I mean, till my bid got hit, but he wouldn't go and pay the the higher price because he would be patient and wait for it. And so I had somebody working my orders for me, and I wouldn't get like ripped off on the price. You know, so that's the issue there. So I don't like and so that's how I did it when I was trading options. I had a broker in the bid, in the options bid, and he would trade the bid for me. Like if I wanted to buy it, he would like bid it at the price that I wanted to buy it. So if the price, in the example that we have, is 77, I would be at 77, even though if you wanted to buy it, you had to pay 80 for it. Well, I would still be trying to buy 77s, and there would be some people who were trying to sell 77s or trying to sell, trying to sell the market, and they would sell the 77. I don't know if you understand what I'm saying. Anyway, I'm trying to buy the bid instead of trying to buy the offer, and consequently, I had somebody trading it. So for me, that's the difference in options. Options with what we're trying to do because we're scalping, we're getting in and out, uh, is not recommended for option traders. Is it cheaper to trade options? I think it's much more expensive because you have to pay for the contracts. For the option contracts. I mean, you're not scalping it like you are here. Okay, so and usually you have to hold on to option contracts for until you get a play from them. I mean, if you buy a call and the market doesn't really do anything, the market doesn't move around. Not these days, but it doesn't move around. It kind of becomes a little bit tougher. I mean, you have to hold on to stuff, and if you hold on to stuff overnight, you have to pay for it. And so I don't know. It's not cheaper. I don't think it's cheaper. I think you get a bigger bang for your buck trading futures than you do options. But again, options are there for a reason, and there are the option traders who know how to trade it, and they know how to hedge it against the futures. There's also that going for you. It's a whole different ballgame. So when I was trading, I never got into the options side of it. I just told you if I wanted to have a position, I talked to my option friend. He got me a position, or he got me in my trade, and yeah, it's just a tough trade. And then if it expires, you know, if it expires, then you kind of lose your money, right? Because it goes to zero. So yeah, not recommended. I mean, I can't say that. I'm just not an option trader, so I don't want to. I just, from what we do, it's kind of tough to trade options. That's all. I guess very long answer to your short question. Um, so, all right, we came back up here to our pivot here at 77. So maybe trading a little bit on both sides of it. Again, it's Friday. We just missed our entry point on the bottom there at 66 by just a little bit. Some of you still got it though. They're a little complicated. Once you get the different option plays are a little complicated, and the names are great: condors and birdies and some kind of snake oil. It's like they got some good names for these butterflies. They got some great names for these positions, trades that they do. But hey, you have to you have to know what you're doing with that stuff. So 3 girls on a flying saucer. Yeah, okay. That could be a flying saucer. It could be uh, any of these names are great. But yeah, they do have some good names. All right, we're hovering around our pivot here, kind of trading both sides of it. Yes, Star Drafters, are you still there? Can you maybe enter those the levels for us again? If you're still here, there they are. Thank you. You the best. You the best. Even on your vacation, you're the best. Solid earnings from America's largest tech companies weren't enough to keep investors from selling late Thursday, with the stock indexes reflecting the sentiment overnight. The Dow was minus 1.5%. Outlooks hit by COVID, valuation fears, regulatory scrutiny, and election uncertainty all seemed to come back to the fore after the session, and it saw stocks rebound from the worst sell-off in 4 months. The earnings cycle continues this morning with results from energy industry, ExxonMobil, Chevron, Phillips 66 are all scheduled to report. So a little dead cat bounce rally. That was your dead cat bounce rally there. Kind of bounced a little bit, but then look what they did. They made new lows. There's a lot of pressure on this market still, and even though it looks like we're going up here, but there's definitely a lot of pressure here in the market. Record GDP growth. The U.S. GDP came roaring back in the third quarter yesterday with 33.1% bounce back. The number of U.S. workers filing initial claims for unemployment also fell by 40,000 to 751 last week, to the lowest level since the pandemic began. Though some are skeptical about taking a quick look at the data, much of the third quarter gains came from carryover effects from fast progress in May and July, while real GDP remains low, 2.9 year to date. Yeah, I mean, obviously, it's not even the market and that grow up, grow at that rate. Oh, the blame game continues up in Washington. So again, we're coming up here to the 84. Remember, once our level gets triggered, it's not as viable as it was initially. So even though 84 was a level, I mean, obviously, if you're going to take it, it's based on for other reasons. And again, if you're going to do it as a price action plays, you're looking 2 to 3 point rotations. Keep that in mind. What do you have? Let's see. 32. Yeah, the pivot is 32.77, not 33.77, as it was typed in there. But I think we could figure that out. I think. But yes, thank you for pointing that out. The blame game continues in Washington. Your all or nothing approach is hurting hardworking Americans who need help now. Treasury Secretary Manchin said in response to a letter from Nancy Pelosi, which detailed 6 areas that need to be addressed before stimulus talks can move forward. This includes states and local funding, school safety, child care, tax credit for working families, unemployment insurance, and worker liability. While an aid package is out of sight before the election, Pelosi said that it is possible to strike a COVID relief deal in the not so-called lame duck session of Congress. Oh, she's like laying into them. Oh, that's right. There's a lame duck session of Congress because some of the well, obviously some Congress people and well, senators and House of Representatives. That'll be a lame duck for some of them. All right, before they whether they lose or not. So that's true. She's right there. So again, if you did take the 84, it's a little different trade, a little different reason that you would take it this time around. And if you did, you get paid off here. But it's obviously not as strong a level as it was initially. And initially, it wasn't a level at all because we kind of blew through it right after the opening. And let's see. Quickly coming back down here to our pivot. Very kind of nervous trade here. So it is whipping around, even though it's not going anywhere fast. It is moving quickly when you get into a trade. That's the thing. So hopefully, in this choppiness, we're not trying to get into trades anytime. You got to be careful down at the 66 area now. Like I said, maybe you do 64, 63, only because of the way it traded down there initially. If we go retest it again, so keep that in mind. If you're more risk averse and you want to adjust a little, yeah, all right, getting really choppy here. This is like the no trade zone that we talked about. Sometimes you just gotta let it do its thing. It's kind of hard to guess which way this thing is going to rotate off of. And we did get up to the 84 there, which was our first initial level after the morning. But again, it kind of blew through it, but it then come back and tested it this time around. And now we're coming back down here again. Be a little bit careful here. 66, like I said, you're looking more at 63 or 64 if you still want to take the trade. You could leave it 66 too, depending on how much risk you want to take and scale in. Hey, oh, my daughter came to visit. What a surprise. Surprise. Go say hi. I'll be right back. Can't believe she's here. All right. All right, we've drifted down here to this again. If you're going to take it, you're coming in. If you're going to do this at all, you're coming in right around here. See what it wants to do. Not, and just wait for the 57. I get it. Especially now that it's trying to turn over here a little bit. But you had to make an adjustment based on the price action from before. And you can pay it off here a little bit. You got a nice quick 2 points there. Again, take stuff off the table. Don't think you're gonna, you gotta look and understand the what the market is doing at that moment in time. Obviously, it's kind of turning over here a little bit, but 57 obviously is a little stronger because of that it hasn't been violated yet. Obviously, we're adjusting here to 66 because of how it did before, so you have to adjust accordingly. Okay, now we're looking at the 57 area. Again, we're trying to find these areas of inflection. We make adjustments. So, I mean, you have to take the price action into consideration and consequently make adjustments to, what is going on. You can't just blindly trade and not make adjustments to the market given what it's telling you at that particular moment in time. As we quickly come down here to the 57 area. Excuse me. Okay, work in 57 area here. See what it wants to do. Keep your stop in. Thank you, Oscar, and thanks, Maureen. I appreciate the commentary there. And I've always said it's like you can say things many different ways, and something that I'm going to say is going to click with you and make sense. You know what I'm saying, and you'll understand. So you can say things a different way. That's why sometimes we have class, and even though it's repetitive, and some of the things that we talk about, I might say it differently one way, and you might understand it or see it differently next time we talk about it. So, all right. So again, if you did get in here and it's kind of not giving us, but again, you have to keep your entry points, adjust them a little bit based on what's going on at the moment in time. Nothing wrong with that. And you could tell there where my secondary entry point was. If you're looking at the charts, and that's why I had the 57, came down to the secondary level there. And so it's giving you a chance here to get out of some for a little bit. Again, how you scale is also a question mark, right? Again, I'm giving you a chance to scratch some of these if you're, if we don't like how the price action acted initially. Sometimes you just got to take what the market's giving you and be good with it, especially if you don't like the way that it was treated us. Yeah, but you're up, right? You're up. Can't complain. market is very, very nervous, to say the least. All right. I mean, that was a nice, that was your definition of a dead cat bounce rally yesterday. That nice rally into the day, and then all of a sudden, overnight into the late afternoon, and then last night they continued to just dump on it. So it was a rally. It looked like it was strong, but not really. Continue to down tick here, down to 49. It's the next support level. Again, you have to take into consideration the what's going on in the market, and we gave us a chance to rotate back up there and give you a chance to scratch it as we quickly come down here to the 49 area. And again, somebody could be saying something. Maybe they're taking it to, oh, that was nice. Taking into consideration some of the talk from lack of, all right, this is lack of talk with any progress with Congress. You know, that could be a reason. Right. Nice little trade there against our 49 area. All right. There we go. That's much better. Again, hopefully, you know, on the 57, you were able to get out of some for a little bit of a loss, or even scratch some, and it came back up there. Just gave you one opportunity, and now we're getting a nice rotation here off of the 49. A very nice rotation there off of 49. That was a nice got down to 48 and a quarter there. Oh, it's going to. I think it's planning on doing that, sir. There. I don't think. I think it's pretty much the numbers keep going up. Europe is also closing down. Um, this is how it started last time. You know, Europe closed down first, and then we kind of followed in parts. And here we're doing it in part. This time it's a little bit different. The states are doing it differently this time. Instead of the United States, a lot of states are partially closing down. So they're kind of doing it independently this time of the government, where the last time they didn't really. They saw New York do it, but they didn't want to accept it or deal with it. New York had to, you know, took the measures that they took because they had no choice. They were having a lot of hospital issues, which is the biggest problem you have here. You have the hospital issues. They're running out of space. That's the problem with all these numbers going up, because you have more numbers going up. Then you have more people going to the hospital, and then eventually more people dying. But that's another story. All right, support. Next level support level that we have is 40. All right, so nice push there off of the um, 49 area. Get quick, nicely 5 points on that little trade. Like patience is important. So again, again, the numbers are not getting any better and they're getting worse. And obviously, the election is going to have an effect on it somehow, some way. I read yesterday. I read to you yesterday how one guy thinks it's going to be. Doesn't matter if they're going to have a um, stimulus or not, especially if the Democrats win everything. All right. So again, the fact that the states are kind of doing this by themselves is important. And but again, it's going to, obviously the numbers are going to be the GDP numbers are going to be obviously a little bit you know worse. You're not getting. We might have the second leg of the V-shape thing here, but or is it a W shape? Right, like the one bounce off. Maybe we get the second bounce down. This is the W shape or K shape. I'm talking about a million shapes. Who the hell knows what shape it is? All I know is it ain't gonna go straight up. Now with the second wave, that's for sure. A lot of pushback here in Chicago and in Illinois, I should say, with the governor in regards to restaurants closing down and some other businesses closing down. It's not a good situation for anybody. Like I said, nobody really wants it. They just don't want it, but it just has to happen. I guess I don't know. As soon as this thing is over, it'll be great. 2020 continues to be just to be what it is, annoying, and it's going to be uh, November 1st on Sunday, Saturday, I should say, right? No, Sunday. Yeah, Sunday. And don't forget, at least I'll tell you that you we in America are going to turn back the clocks on Sunday. So we're going to be, I guess, an hour later. So we're going to be, we fall back. We push the clock back here in the United States on Sunday. So you people on the other side of the pond, and keep that in mind. You might be here an hour early and not know that we're here, but we will be, because we are going to be turning back the clocks on Sunday in the United States. So keep that in mind if you are trading, and especially if you're on the other side of the pond and come in here and say, "Hey, where are these guys? They're not trading today? You kidding?" All right, so got down to the 44 and change area there. All right, market again under some pressure and continues to come down here. Just the 40. Well, well, it is a, we are down. That's our next level on the downside. Right? It's the 40s. Yeah, no, I think 40 is okay. It's no, we're still all right. We still got 3 points there. That's still a pretty good move to the downside without. Well, we'll see. You maybe take a lower end if you're concerned. right, quickly, quickly moving around here. Again, if you take the lower end, give me a chance to, if you don't like the volatility there, give me a chance to get out. And again, just hit those stops. I guess I thought they would not be there, but they are. But so quickly rotating down. Again, you are given a chance to adjust here. That's the only good thing. And also giving you a chance to lighten the load a little bit. Get up to the 42 area there. It is moving around very fast, so be very careful. Yeah, do have lower levels here. This could get ugly today. There's no doubt about it. It seems to be getting uglier by the second. So below 33, we got 26, 19, 10, and 32 even. So below 30, 40, 33, 26, 19, 10, and 32 even. And that is where we're at today so far. Thanks, sir. There's the extended low. I was giving you up. I thought we were going higher for a minute there, but we're going down here. So we'll see. Trying to bounce here off of this 40 area after going down quickly to 35 and change. Again, keep your, again, leave minimally 5-point stops here based on what is going on. But it is quick. If you get in at it got down to 35 and change. It didn't get down didn't get down to 35. Yeah, I thought you were going to make the adjustment down a little to the lower end there. 35 and a quarter was the stop. I mean, 35 and a quarter was the low. All right, now we continue coming back down here. Next level of support we have is 33. Gotta be moving fast here, as you could tell. Keeping us on our toes this morning, right? All right, getting a nice little quick rotation there off of the 33 area. And you can always take some off and leave a stop in if below a new low there, giving you a chance to ride one of these once we hit this sort of right entry point there. As you're peeling some off along the way, but this is moving so fast. Then you should stop. That's right. You've done good. You've done good this week. All right, coming back down here. Again, next level on the downside we have is the 26. Obviously, we got to push off of the one down to 33 and a quarter there. So we obviously got filled. And we got a quick rotation there off of that area earlier. And so now we are not using that 33. Next level on the downside we have is 26. But we're getting a nice little push here off of this 33. Definitely giving you, again, I had 4 points on it before. All right, nice little push there. Again, we're going to find one of these areas where we're going to get a nice quick rotation again, depending on if you have multiple contracts and if you were able to get out of some and stay into for some. Yeah, good job there, HD. All right, John, you have a nice weekend. All right. Markets are definitely keeping us on our toes this morning, but again, we are acting quickly. We have to, based on the movement of the market and price action and stuff like that. So we're trying to keep you in the game, trying to help you get in, get out, trying to make adjustments as we go along. I mean, these are what we're trying to do here to keep us sane. I think if we get below the 30 area there, we might have a push down to the 26. The market does not like what's going on anywhere. All right, this is just a lot of pressure on this market. Next level on the downside we have is the 26. I think we get below 30. It might open up the door to a little more trade to the downside. Big move here on this 1 hourly band. As it comes to an end here, we're from 85 down here to 35 or 30. Quick. Oh, disappeared. Welcome to futures trading. Oh, disappeared again. Crazy, right? It is volatile. Volatility has just spooked this market. I mean, and remember, these people are looking for stuff that makes the market move around, and they see what's going on. So there might be some news here in regards to trying to fix this or not, fix the push to the downside by coming and saying, "Oh, we're going to come up with some package or something," because they don't like what's going on with the stock market. And this this could be happening right this minute as we're talking. They got a new low by a couple ticks there, and then boom. So whatever created, somebody said something, and this is what you have to be careful about with these moves. Oh, good, HG. I'm glad you did. Good catch. This is definitely futures trading today. We're getting back into these again, the more we go down, the more these things occur. Where you're going to get the volatility because starts going up, and it's going to give you you have to take a little bit more risk, but then there's a definite risk reward situation going on here, and also not only that, but if you have a bad trade, you're going to have a chance to get it back. It's not going to be just a bad trade and then there's nothing going on the rest of the day, which has happened, but not recently. We've been pretty busy. Again, the numbers in the United States are just absolutely brutal as far as COVID is concerned. And the market is afraid of what could happen, especially with Europe doing what they're doing. Yeah, this is futures trading, man. This is not like taking nap time and come back and see what happens. What's wrong with you? Well, hopefully you take your nap and buy into 33 level. Did bad news come out? No, I just think the market is just it's simply there's no good news. Let's put it that way. How's that? There's no good news. It just seems to be just this COVID thing. No news from trying to come up with some kind of stimulus package. Election uncertainty. Well, the election around the corner. How's that? And there's uncertainty associated with that, obviously. But again, the market is people who make news and could move markets are very sensitive to that, and they could come up and say some statement here, which I don't know what they did here in the last 5 minutes, but you can see they went from 30, almost 30, all the way up to 50, basically, in this 5-minute bar. resistance would be back around the 65, 66 area. The remnants of Zeta or Delta or whichever one hits, uh, the Gulf Coast there, throwing a lot of snow into the New York area there. Or snow and rain. It's got chilly to hit the cold front. Actually, that cold front kept it away from Illinois as it was coming up, and the cold front kind of pushed down and kept it going east. So we didn't get any remnants of that little rainstorm or hurricane that just hit. And this would move fast. I mean, it was like Wednesday, and today's Friday, and it's already in the East Coast. I mean, this one just did not really stop anywhere to say hello to anybody. Just kept moving quick. The last one just hung. We're all become like meteorologists these days because I got my lessons from my friend down there. All right, we did bounce there. I think we get below 30 still. Get below 30, we might make a move down lower, and 26 would be the next objective. And then below that, we got 19, 10, 32 even on the upside here. The resistance would be around the 64 to 66 area. This here in the middle could be, I mean, I know it's like a big range here, but it could do anything. We could rally, we could go back down. This is dangerous stuff. We got to just be patient and pick your spots, only because we just don't know. You can only find those inflection points, or we try to find those inflection points, I should say. And we got to just trade them when they get there. Trading in the middle here can get you in trouble very easily, the way these things are moving. The best thing to do is just to be patient and wait for the opportunities to present themselves instead of trying to get out there and guess that this thing is going to continue to rally or is it going to go back down. We don't want you to do that. We want you to take good trades based on good logical reasons. And as long as the reasons make sense to you, then you put that trade on. This no trade zone here, back and forth, could do anything. Literally, we could rally quick, we could break quick, and you wouldn't be right or wrong one way or the other. You'd be guessing though. That's for sure. So just be patient and wait. Again, 66, 64 to 66 above is some resistance on the downside. If we get below 30, we could rotate down lower to our lower levels. The market is a little bit nervous for a lot of reasons, and we'll just be patient and wait what happens. So we'll come back here in a little bit.
Hey, a couple quick programming notes. For those that are not signed up for Salts Monthly, I have to authorize you for next week. So let us know what your plan is. I'll send out the link to everybody so you have it. Hey, Oscar. Hey, DSOP, welcome. Send it out to you also. Chris. It's nominal. Saul wants to make sure everybody is accounted for. Holgar, I almost missed you. And Martina, I almost missed you. Okay, good. So click on the link, sign up, pay your nominal rate, and then I'll authorize you for next week. For those that are joining us on the outside, stop in, click on the links, learn to trade and earn. Looking forward to seeing you in Zoom directly.